Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we're joined by Simon Conn from Investors Mutual and David Allingham from Eli Griffiths, and we're talking bond proxies. They have been a source of great money making. Dave, we'll start with you. One of the great assets of Australia to fly the planes in and out, Sydney Airport. Buy, hold or sell?
I think Sydney Airport's a trading sell at the moment. They've had an extraordinary year, FY16. I think FY17, the comps, particularly on the inbound travel and the capacity into Sydney Airport, gets a little tougher. Valuation stretch, bond proxies are under pressure, sell for me.
Okay, Simon, you couldn't afford not to be in Sydney Airport recently.
Look, it's a great asset. It's a great asset, Matthew, but at 22 times EBITDA, geared to the whatever it is, 7 times, it's just very, very full, and I think it's a clear sell.
Okay, let's get in the car and go for a drive. Macquarie Atlas Roads, buy, hold or sell?
Got to go a long way to ride it one of their roads. Look, it's been a huge beneficiary of low interest rates, re-gearing of the assets. It's got fees coming out of it as well. Hasn't paid a dividend. I think it's a sell.
Right, it's been another cracker. All these roads around the world, everyone loves to sell them. Buy, hold or sell?
I think it's a hold. Look, I think it's expensive, but Peter Trent and the team have done a very good job there. They've got a wave of lower European bond issuance coming, which will help their earnings. There's a potential acquisition in the Dulles Greenway or equally a sale there. But I think the market has forgotten that it is still an externally managed vehicle by Macquarie. They just booked a $130 million performance fee out of that. For me, it's a neutral.
Property trusts, David, are almost back to premium TNTR that they were in 07. Danger signs. One that's done very well, Charter Hall Retail. Buy, hold or sell?
That's a sell too, Matthew. I think, look, it's a good example of a well-managed REIT. It operates a good business, but it really hasn't delivered any growth now for 2 or 3 years. They're struggling for acquisitions. Their most recent one was in Katherine. Haven't been to Katherine for a little while. I think that's a sell.
Okay. Simon, property's been absolute winner since 2009.
Yep.
Charter Hall Retail, buy, hold or sell?
Look, I think it's a hold. 6% yield I think is still okay. We prefer SCP in that sector, so I don't actually own Charter Hall, but that sort of yield, I think it's okay.
All right, sick of talking about bonds and bond proxies. Surely there's somewhere else we can make money.
Yeah.
What's a non-correlated stock that we can have a look at?
Yeah, look, one we've added to the portfolio over the last 6 months is Integral Diagnostics. Listed with a lot of flurry last year. Obviously fell up below issue price.
A lot of disappointment.
Well, more concern around what would happen with Medicare funding and healthcare funding generally. A lot of reviews are going on. Post-election, nothing's really come of it. The health insurers have rallied strongly. Government didn't seem to be so aggressive in hindsight. And I think the market's starting to normalise. We're seeing GP referral rates picking up. It's trading on about 13.5 times, 5% yield. Looking at next year's numbers, it's reasonable. It's got a good manage. It's just cheap. It's unloved. It's off the radar screen a bit. It's a business. I think healthcare and technology are 2 growing sectors of the economy. It's at the it sort of plays with those 2 themes. Well managed. It's okay.
Okay, Dave.
I really like SG Fleet, Matthew, particularly into reporting season. I think the stock's trading $4 today. I think it's a $5 stock. The Bill Shorten letter only a few months ago saying that they would not muddle with the novated leasing arrangement, and the Turnbull government's also on side with that. So I think the regulatory risk has been removed. Stock is about 14.5 times in the next year for 30% growth, and their recent acquisition they completed late in the year, this financial year, NLC, we think has got material synergy upsides which aren't in the market's numbers. So I can see that being a $5 stock over the next 6 months.
There you have it. Get out of your planes, get out of your cars, and for this reporting season, get down to the stock market and look for things that are not determined by bonds.